Now let's look at what's going on in India. The country just had its largest ever IPO. That's initial public offering IPO. It's when a company goes public for the first time. The company here was Hyundai Motors India. It raised $3.3 billion during the IPO, and that's a new record for India. But that was just part one. Today was part two, the moment of truth, listing day. It's when the company's shares are listed on the stock exchange and trading can begin. That happened today. And it was rather lackluster. The auto giant share prices fell by about 7%. That's not a good first day. So why did Hyundai India shares tank, and what does it mean for the company's future? Our next report has the details.
Today was listing day for Hyundai Motors India. It's a subsidiary of the South Korean Hyundai Group, and it went public. This is the first time that the Hyundai Group has listed shares outside South Korea. It shows that Hyundai is betting big on India. On paper, it makes sense. Hyundai is India's second largest passenger vehicle company. It has about 15% of India's domestic car market. It is second to just Maruti Suzuki. So Hyundai decided to capitalize on this by having a record-breaking IPO. Hyundai Motor India decided to offer 17.5% of its shares. This took place last week, and each share ended up being valued at 1,960 rupees. That was the offer price. That's about $23.31 per share. Hyundai India managed to raise $3.3 billion during the IPO. It was a new record for India, the largest ever IPO. It was the world's second largest IPO this year. But it's one thing to get a great valuation when the shares are issued, and quite another to impress the markets. Today was the moment of truth, listing day. It was the first day that Hyundai India shares were traded at the stock market. The ceremonial bell was rung this morning at India's National Stock Exchange, or NSE. And then the market forces were set loose. Unfortunately for Hyundai India, the market was in a foul mood today. It was the worst trading session in about 3 weeks. The two main benchmarks, the Sensex and the Nifty, both logged the worst days since October 3rd. Sensex fell by 1.15%, Nifty by 1.25%. All major sectors were down. The Nifty Auto Index was down by 2.47%, so it was bad all around. But Hyundai India fell harder than most. It ended the day about 7% down. So why did Hyundai Motor India fail to impress on trading day number one? Well, there are a number of explanations. The first is falling sales. Between April and September this year, Hyundai sales in India fell by 2.6% compared to the same time period last year. Growth in the auto industry has been sluggish overall. Total sales rose by just 0.5%, so Hyundai isn't some outlier. But falling sales don't really inspire confidence. Another reason is slow growth potential. Hyundai has a factory near the city of Chennai. It operates at about 94% capacity, so there isn't really room to improve. Hyundai has acquired another plant, and it is planning to increase its capacity, but that will take time. So it'll be a while before both sales and profits surge. Perhaps investors didn't want to wait. Then there's an increase in the royalty rate paid to the Hyundai Group, from 2.5% to 3.5%, meaning more of Hyundai India's profits will be sent to South Korea. Perhaps these factors scared off retail investors. But this isn't the end of the world for Hyundai India. The company has solid foundations. It has proved itself over the years. So it is being seen as a long-term bet. Today may not have been a good day for the auto giant, but one day isn't enough to undo Hyundai India's achievements.
Firstpost decodes the U.S. election, explains how America chooses its president. Your primer on the race to the White House. Everything you need to know about how America votes. and its global implications. U.S. Election Explained, every Monday and Thursday only on Firstpost.